Scott's at the SIBO. Scott, what are you doing? Are you taking advantage of the sell-off, or are you steering clear and shorting these things?
So there's both sides of it, Oliver, and we've talked about this on the panel and with Kevin Hinks for the last 6 months, that this was going to be really important to see how the retailers did during the holiday season. Obviously, Macy's, absolutely, just nobody would have expected how bad this number is, and it's not, in my opinion, a stock right here that you want to jump in. If anything, and I'm not doing anything in Macy's, just let it be told out there, if anything, I'd be short Macy's. I think retail has now proven this is going to be a very stock-specific sector. Okay, Kohl's came out. The numbers weren't very good. They weren't as good as what they were last year for the holiday numbers. But what I like about Kohl's is that they actually reaffirmed guidance moving forward. So I like that. Target actually had really good metrics when you bring it down. They were up before the announcements of Kohl's and Macy's came out. So I actually love Target the best out of the 5 or 6 that got absolutely annihilated this morning. In fact, I actually bought an upside call spread just earlier this morning in Target. Just, I'm laying it out there. I like a recovery here. I like the fact that their guidance is reaffirmed. Their metrics were really good. Kohl's, as soon as I get back to my office from here, I'm actually going to be looking to sell some downside put spreads here, because I think we're at a level here in the lower 60s that really, really makes sense. In fact, Kevin Hinks will like this. I'm looking to probably do a unbalanced put butterfly, which he really loves. But overall, though, Oliver, I think the theme for retail is it is going to be very stock specific moving forward.
Yeah, it sounds like your take here is that, look, you might be able to find opportunity when the stock specifics kind of go out the window, and a company like Target with almost 6% gets nailed with the rest of the market.
Exactly. I mean, to me, Target is just really let's call it a tag along today, that if the rest of the retail space hadn't been just absolutely annihilated this morning, this stock would probably be up 2, 3, 4%. Yeah. So I really like that a lot. But when you break it down, you look at a Macy's, why are they getting hit? Obviously, besides their sales being just horrendous, they have not adapted to the online world yet. They really haven't. And you look at a stock like a Kohl's, you look at a stock like a Target, and there's some other ones out there that they have. And those numbers, those metrics are actually very, very solid.
Yeah. Well, the Kohl's definitely spent a lot to do it. That's the catch, though, right? They were just sliding these pamphlets under every door in America and building out the inventory. Scott, real quickly, on the structure of your trade, you mentioned selling the Jan 71 calls in Target and buying the February 70 calls, but the other part of the trade, the upside calendar call spread. Tell me how you sort of where that fits into this.
Sure. So I do like the upside. It's totally risk defined. But what I'm doing here, Oliver, is basically you can look at it as I'm buying that February 15th 70 strike call. I'm financing it by selling a nearer term, one that expires in 2 weeks, the 71 strike call, so higher. So in this spread, I get extra skewed deltas, extra bias to the upside for a recovery back, but I'm still hedged. I'm still totally risk defined. So basically what this sets up as is a slow moving recovery in Target over the next 3 to 4 weeks.
Gotcha. All right, there we go. Scott Bauer, love it. Really good insight.
Yep.
Thank you, Mr. B. Chat soon. All right, Scott, the CEO of Profit Trading Academy, joining us from the SIBO. Up